Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, let's shift focus to earnings now. FMCG major HUL will be reporting its third quarter numbers today. Manglam is here with a preview of the same. Manglam, hi, morning.
Good morning. So, for HUL, this quarter has all possibly have, because one, they have a favorable base both year on year as well as quarter on quarter. Quarter on quarter, we'll of course have the GST restocking. Year on year, it was the demonetization quarter. Along with that, the companies launched a lot of their products, Lakh, Ayush, the Naturals portfolio, focus on the company's cost reduction. So all the tailwinds coming together, it is expected to be a good quarter for HUL. But does the street know it? Of course, yes, because the stock is up 70% in the last 12 months, trading at record levels and also trading at 48 times FY19 earnings. So a lot of that is in the price. Now it's just for the company to go ahead and deliver. As far as our poll is concerned, we're working with a revenue growth of 10%. Mind you, just watch out for the revenue growth of 10% rather than the absolute number, because there might be a lot of implications with regards to GST. EBITDA, on an absolute basis, we are working with a number of 1,684 crores. That means a 24% growth year on year, and that will maintain the company's margins. Net profit by 11.5%. On an optical basis, the number is 1,156 crores. But remember, the base quarter, there was an exceptional. So adjust for that, the net profit is likely to be 25%. For Hindustan Unilever, the most important thing that we watch out for is the underlying volume growth. And this time, the street is working with anywhere between 8 to 9%. Remember, the company had last posted double-digit volume growth in the fourth quarter of FY12. So can they go ahead and do that or not is something that the street is going to look out for.
Okay, all right, Manglam, thanks so much for that. Hindustan Unilever in the last 1 year moving from a 52-week low to a 52-week high, giving you a return of more than 50%. But let's focus on the other big number, Bharti Infratel. That's going to be coming out with several numbers. And I think Ronit joins us currently. Hi, Ronit. Good morning. You've got a late evening. What time are the numbers expected?
Hi Nigel, good morning. The numbers are expected post-market hours, and we are expecting no surprises from the tower company. So I'll start with the numbers. We are expecting the revenue growth to be flat to positive at around 3,600 crores. And the EBITDA as well, the EBITDA margins, we are expecting a slight downtick, largely due to the energy business, wherein the margins are going to be impacted. Moving on to the PAT, that's not important, but we are looking at around 9% uptick, around 695 crores. But the key things to watch will be the net co-location additions. These are basically on their towers, how many telecom companies add more networks onto their towers, and we're expecting a deletion this time. Remember, in the last 6 to 7 quarters, there have been major additions thanks to Reliance Jio. But now, thanks to the consolidation in the whole telecom sector, we're expecting net deletions of 710. If you see from the highs of 6,000 to 7,000, the net additions have been quite high. And right now, due to consolidation in the telecom sector, the key thing to watch will be the net additions or if there are deletions. Active.
Okay, all right. Thanks very much for that, Ronit. So that's on Bharti Infratel and what we can expect. But Zee Entertainment will be posting its Q3 numbers today. Always an interesting set of numbers there. Sonal is here to tell us more. Sonal.
Thanks a lot for that, Ekta. Well, we are expecting some decent set of numbers considering that we have the sports business in the base. In terms of revenue, we're expecting a growth of around 7%. EBITDA is expected to grow about 8%, and margin expansion is expected at around 50 basis points. But the real growth will be seen in the profits, which are expected to go up around 50%. But the key number to watch will be the ad revenue and subscription revenue growth. Now, as per industry estimates, 13 to 14% growth is what we have seen overall in the industry. And since we have sports business in the base on reported basis, we're expecting an ad revenue growth of around 16 to 17%, but subscription revenue is expected to decline by 12%. So on like-to-like basis, we expect an ad revenue growth of 17%, domestic subscription growth of around 7%, but overall subscription growth of around 10%. So these will be the key numbers that we'll watch. But where is this big profit number coming from? It'll be from the extra income that is coming from the new releases, that is Kareeb Kareeb Single and Secret Superstar. Apart from that, we are also expecting some increment in the operating costs, majorly because the company has spent a lot on these new releases and has spent on Zee Cinema Awards. Last time when we spoke to the management, they told us that they will be able to keep their margins in the 30% plus range. So we'll have to really see how it pans out today.
Well, an Ernst & Young India pre-budget poll of 150 CFOs finds that almost 50% believe that corporate tax will be brought down to 25%. Here's a special conversation that Shireen had with Sudhir Kapadia, the national tax leader at Ernst & Young, Pratibha Advani, the CFO at Tata Communications, as well as Amit Kumar Garg, the CFO of NIT Tech.
In my experience, talking to various corporates across the country, most of them, if not all, would prefer a simpler, lower rate and, phasing out of deductions, exemptions, much more than a complicated system with a higher rate. And we have seen countries like US, of course, being the latest, go down that path. So there's a lot going for it, and I don't think the revenue loss will be that substantial.
You don't believe the revenue loss will be that substantial? Pratibha, which camp do you belong to? Status quo, or do you think that we are going to see, in light of what's happening in the US, etc., a move on the headline corporate tax rate?
I would like to see a reduction in the corporate tax rate. Having said that, while Sudhir mentioned that the effective tax rate is 25%, but if you actually see, India has one of the highest incidence of tax. If you look at the corporate tax and the dividend tax together, they are one of the steepest. Given what's happening globally with US and UK leading the way, I think it would be only appropriate for India to follow suit.
Are we likely to lose out on our competitive advantage if we don't see a reduction?
Short term, maybe no, but long term, yes, because corporates will move to geographies where they would find efficient tax structures.
Okay, so Garg, let me ask you now about another issue that keeps coming back every budget, and that is to do with the minimum alternate tax. Status quo again, 36% in the polls say that the budget is unlikely to replace the MAT with a lower alternate minimum tax. Do you agree with the poll, or do you have a different point of view?
The poll is there, but my view is that, if government really reduce the rate, if they don't want to get away with MAT, it can help, the industry. And I come from an IT industry, it will be very helpful because we are in SEZ. And most of the benefits will flow out to sunset period for us. So it makes more sense that if government reduces the rate, it gives more disposable funds at for the investment for the corporates.
Is that your bet as well, Pratibha?
Actually, I have a very divergent view. While that is my bet, but I think the government can reduce the MAT, but use it to divert it back into businesses. Tell them that they need to invest back into expanding capacities, production, which in turn will provide impetus for growth.
That could be a way to incentivize growth, Mr. Kapadia. Is that likely to be something that you believe they might want to take forward?
I think, Shireen, that's a great point Pratibha made. And just to add to that, just to remind ourselves that the government did start in a way by prescribing a 25% rate without deductions for, new manufacturing companies. So there are 2 points here. One is, we still have services contributing so much to the economy. Why not give that option to services companies as well? It's an option. And number two is, again, going back to my previous point, is based on conversations with so many companies. Companies don't mind, even existing companies, giving up deductions in lieu of a 25%. So an optional 25%, I think, would be a great move.
Okay, well, moving on now, appliance maker Amber Enterprises will be opening its IPO today. The price band is set between 855 and 859. Anisha is here to tell us what the company does and what we should watch out for. Anisha, morning.
Good morning, Ekta. Well, yes, as you mentioned, the issue opens today and ends on January 19. The issue size is around 600 crore rupees, which the company is looking to raise to a price band of 855 to 859 rupees per piece. Now, the post issue, the market cap implied on the upper end of the range can be around 2,700 odd crores. And this the company is raising through a fresh issue of around 475 crores and an OFS of around 125 crores, implying that the promoter stake will go down from current 59% to 39%. Post the IPO. In terms of the usage of these funds, well, they are going to pay off the debt and the borrowings that they have on their books of around 345 crores, and the rest they are going to use for general purpose, corporate purpose. Now, in terms of what does the company do, as you mentioned, it's an appliance maker. The company is both an OEM and ODM maker. They have a good market share of around 55% in terms of volume. They have shifted more towards the ODM, or the original design and manufacturing system of the company, so that yields higher margins for the company. In terms of the client list as well, all the top 8 to 9 brands that are there in the country are the clients of this company, and that is why things are looking up for them. In terms of what the brokerages have to say, Angel is a bit bullish on the counter, and they say that you can subscribe to it if you have a medium to long term range. They like the fact that there is the margin of the company is around 9%, the capacity utilization is sub 50%, but there's room to improve. On the valuation front also, they mentioned that the future earnings growth trajectory looks very strong, and that's the reason they expect the stock to trade at 20-25 times FY20 earnings, which is still at a discount to what Dixon is trading at. So clearly looks like the issue is going to see a good, interesting, take up from the investors. Back to you.
Okay, all right, Anisha, thanks very much for that. So that's an IPO opening. Well, just focusing on the pharmaceutical space, there have been some more tweets which have come out from the US FDA chief overnight, and that talks about the complex generic space and the kind of competition that they are looking to probably increase there. Remember that the complex generic space is probably a little less competitive, and that's what a lot of companies have focused on in order to differentiate themselves from the pricing pressure which most generic companies are facing in the US in terms of the standard kind of drugs. So now the US FDA chief is also looking to increase the competition within complex generics. So that means that little bit of respite that a lot of companies had could probably see more competition come in there as well. The US FDA chief is going to look at more means, for example, to increase those filings and that kind of transition of competition there. So we could probably see more pricing pressure eventually. It's nothing near term, but it's just the plan, and that gives us a sense in terms of the way forward for a lot of companies.
Okay, Ekta, thanks so much for that.
Well, Manisha Gupta is now with us to tell us what she's tracking in the commodity currency space. Manisha, morning.
Morning, and thank you so much for that. Well, there is a definite profit taking that you have seen come in for the Asian markets today when it comes to commodities, starting with the metal space. And there was a point yesterday night in New York session when you saw the nickel prices decline by nearly 5%. The closing came in 2.5% on the lower side. Same is the case with copper. You have seen the inventories gain. There is profit taking from the hedge funds. Remember, we've been telling you on how many of the hedge funds and speculative money has been at record highs when it comes to many of these commodities. So there is, with the US dollar taking a pause from the kind of decline it has been taking, there is that profit taking coming in now. So the last 24 hours, it has been a definite decline, whether it's copper, zinc, nickel, steel prices, iron ore, all of that has started on the lower side when it comes to in the Asian market. Not just that, the crude oil prices are off at 3-year highs. You saw silver prices decline 2.5% yesterday. And what has seen a double-digit decline has been the cryptocurrencies yet again. We saw nearly 13 to 20% of a fall for Bitcoin and many of the other altcoins, as there are reports coming in that various central banks are now looking at alternate currencies and are trying to put in tighter regulations or even suspend or ban it at some places. And that doesn't augur well for the bulls right now.
Okay, all right. Thanks so much for that, Manisha. Well, let's hop across to Mangalam. He joins in this morning to tell us what's going on in the derivatives market. Hi, Mangalam. Good morning. Options data yesterday. Massive action there, I believe, from the FIs.
Absolutely, across the board in options. But tell you what, even in the index futures, or if you take a look at the stock futures, the cues weren't as bad as the ferocity of the fall that we saw in our markets in yesterday's trading session. So the FIs on a net basis sold just about 37 crores in index futures, an equal amount of buying and selling seen there. They bought about 700 crores in the cash markets. So because of the lack of aggression in selling, the Nifty futures premium, which was just about 1.5 points, moved up to about 9 points. In index options, again, 10,000 calls bought, 8,000 puts bought, and 5,000 short puts added. That means that they are playing for a downside, but again, they believe that would be protected. The Nifty put-call ratio, a number that we've been tracking for a very long time, has moved to a slightly more believable 1.66 from the heady 1.78 that we were seeing. 10,750 and 10,800 calls saw a bit of writing, and the put writers felt a little jittery at 10,700, 10,600, as well as 10,500 levels. The big thing that really stood out was the buying in stock futures. Third day running, we saw big numbers coming from the FIIs in stock futures, and this time it was the IT pack. Day before yesterday, remember, it was the banking pack that saw a lot of turnover. IT pack yesterday really saw some purchase. 15 stocks in F&O band, that is something we need to keep an eye out on. A couple of stocks that entered the ban: Balrampur Chini, India Cements, and HCC, while GMR, HDIL, and Reliance Capital are out of the F&O ban.
Okay, all right, Mangalam, thanks very much for that. Well, on that note, we're going to wrap up the show. Thanks for watching, but let's also hear our picks from our Bullseye contestants for day 3 of the week.
Our first call is a sell call on Apollo Hospitals for target of 1080, stop loss at 1185. Second call would be a sell call on OBC for target of 110, stop loss 121. Third call would be a sell call on Steel Authority for target of 88, stop loss at 96.6. And a solitary buy call would be on Dr. Reddy's for target of 2630, stop loss 2415.
The first buy recommendation is on Gati. One can buy Gati for a target of 157 with a stop loss of 144. The second buy recommendation is on Persistent. One can buy Persistent for a target of 794 with a stop loss of 730. The first sell recommendation is on South Indian Bank. One can sell South Indian Bank for a target of 30.70 with a stop loss of 32.70. And a second sell recommendation is on MGL. One can sell MGL for a target of 1042 with a stop loss of 11.5.
First is a buy on Prism Cement with a stop loss of 142 and for the target of 160. Second is a buy on Mangalam Cement with a stop loss of 440 and for the target of 480. Third is a buy on Just Dial with a stop loss of 619 and for the target of 678. And last is a buy on Indorama Synthetic with a stop loss of 47 and for the target of 56.